Perfecto mundo. We're here today on the Mobile Mailbox Money Mastermind. Welcome to the family bank here today, actually providing investors positions and stable, contractually agreed upon collateralized lending opportunities in first as well as second lien positions. Did you know that you could become the bank and start performing in a scarce market, no longer having to worry about interest rate fluctuations, hardships associated in long-term real estate investment strategies, and all the above? Being a lender, becoming a private lender in collateralized lending opportunities. I'm Alden Guajardo. For those of you that don't know, we have my partner here, James Guajardo, Jason Roberts, and our other associates here today, just really trying to provide unfiltered value out in the marketplace. You know, there's a lot of people that provide what's it called, that paid education platforms. I'm all about creating relationships for long-term return on investment over just selling some education program. We do have two books on Amazon. You know, if you feel inclined, feel free to check those out. You can just search Alden Guajardo on Amazon. But we're here today, little house cleaning from Mobile Mailbox Money, Win Mobile Homes, and Silvercrest Opportunity Fund. I'll be going on a podcast later today with Mark Monroe, one of the largest seller finance individuals in the nation. He's got, I think, like 1 million views a month on his seller finance Facebook group. So I've interviewed him a few times, as well as we've got Arizona Real Estate Investors Association coming up here on Tuesday, October 14th. So if you're in town or want to come into town, need a reason to do so, that's a great event to come check out the market data that they provide, as well as check out our booth here at Silvercrest Opportunity Fund and Mobile Mailbox Money. That's a quick little house cleaning. We did, I think, $250,000 in transactions today, acquiring notes into Silvercrest Opportunity Fund with one of my accredited investors. So massive deal flow and first movers advantage provided to you today in an exclusive program, actually. So these are not seen anywhere else in the nation, these positions. And just to preface, we have our passive investment programs brought to you 506C by an accredited investment fund, Silvercrest Opportunity Fund. And we're currently raising for a 1-year term at 10% net paid monthly, a 3-year term at 12% net paid quarterly, or 5-year term newly originated program at 14% net paid monthly. So those are income-oriented investment strategies in notes. This is being the bank. Okay, not speculative appreciation, not having to worry about a play for improvement and things of that nature. Our programs currently that we offer are note investments in first liens on manufactured housing that we seller finance in the Arizona market, and now a new program, the private line of credit program provided to you today is an equity-based lending strategy on second liens with a qualified operator. So who's that qualified operator? It's actually us sitting here in front of you. We've done hundreds, if not thousands, of deals across the nation in most major markets. So hitching your cart today with your capital could potentially earn you a double-digit interest rate in a collateralized lending opportunity. Those second lien positions as a private line of credit, asset based, is 65% loan to value or less, right? So sufficient equity to provide us cushion if for whatever reason that goes non-performing. If that does go non-performing and we have a capital partner which facilitated the transaction with their say 30 to 60,000 bucks, we end up paying them off.
Regina?
We
Yeah,
end up
yes.
Sean, can you mute your mic, please? We end up paying them off, right, with a hard money loan, paying off the first and fix and flipping the property. So fully passive for the opportunities that we bring to you today, not only in first lien seller finance notes in manufactured housing, a Warren Buffett investment strategy, but also new tranche, new availability of second liens in single family residence in Texas, Florida, Georgia, the Carolinas, and we'll be going after those aggressively. Jason, how many deals are you guys kind of getting a month? And maybe we could just talk about a few that we may have on the table.
Absolutely. Yeah, we're probably getting 30 to 40 a month pretty easily without trying. There's definitely a huge need for it. And with this new program, I'd say we're 6 months or a year ahead of anybody doing this. So we've got not only seconds, but we also have some firsts for folks that are looking for single family first investing. We've got those opportunities, not as many as the seconds, but we get 4 or 5 of those a month. I want to start with those if you're ready for me to.
Yeah, absolutely. And obviously, a first lien is going to yield less than a second lien, and those have different implications. So, depending on, what education platform our investors here today have come from, you may have been taught to stay away from second liens. You may have been taught to invest in second liens because of the nimbleness and high return on investment. So the passive diversification actually provided to you today is all secured through title companies, attorneys, and written documentation to facilitate a bank quality return in position. So let's check this one out here, Jason.
Yeah, this is in your backyard. So this is a you can see this estimate right there, 445. This is a first lien position loan at around, call it 250. Um, um, Monthly payment, I'll let you figure that out, but you're talking about 55% loan to value on a very, very nice looking house, obviously. And again, this is a first lien position. It's going to pay off the first mortgage. So the investor is going to be sitting, in the very first spot in a very high or low leveraged situation with a great interest rate that can be done for, several years. Now, obviously, in these first positions, the higher the interest rate, the more motivated the person is to refinance them. But typically, you're talking about a 1 to 3 year term before they're trying to refinance or get their credit straightened up and go for a retail loan at that point. So that's one. That's in Arizona. Let me
So
pull
real
another.
real quick, just that's a $250,000, right? On a first lien position in a desirable market. We could provide someone a hypothecated note, which means to pledge this first lien as an asset in order to garnish capital investment and provide a monthly payment and a potential 1 year term liquidity of $2,083 a month. So if you know how to run an interest only calculation, you can kind of figure out what your yield will be annually. But us being here in Arizona, it just happens to be here. We have a lot of bells and whistles in most major markets, but Arizona is really our backyard. So we're really vested in this market. Quality home. I mean, you got a pool in the program, average purchase price that's right at it, 450, median single family home there for a first lien position, and that loan to value 250,000, that's like half almost, or a little bit, 60-65% loan to value, providing a double digit interest rate and a first lien hypothecated collateral.
Absolutely. So that's a first position. I got another one. And these are ready to go. They're in the due diligence process, obviously, but once we get through due diligence, they're going to sell in 24 hours typically because of the low loan to value and the interest rates that we're offering. This is a house again that now this one's in North Carolina, another first lien position. You can see this estimate there is 362. The loan on this one is going to be under 200. It's going to come in probably around 185 to 190. Exact same scenario where you're in a loan to value at just shy of 50% or so. Another good interest rate around there. Another 1 to 3 year term before the homeowner will probably refinance out of that loan into a more traditional loan. But again, first lien position, property that is it will be ready to invest in next week, just like the other one. And a great neighborhood. Charlotte's one of the better cities in the country. So a great city in a great state. 50% to loan to value roughly with a good interest rate. And, it's a better LTV than most banks are given. Traditional banks are offering 90% loans, and this is at 50 to 55%. So ton of equity cushion for protection. And again, it should be said that our goal, it's not our goal, but at some point, if these folks fall behind, they don't want to lose all their equity. So our job is to help them keep as much equity as you can. So more than likely, there will not be a foreclosure. There will be a situation where that seller calls us and says, I can't afford it. What do we do next? Maybe we help them, rehab the property so that they can get retail. But we're in a situation where we're actually helping people keep their home, keep their equity, and we're also in a situation where we benefit, as well. So those are two first lien positions. I've got another first lien position if you want to look at it, or you want to just look at second liens.
Well, quickly, that was like 190, right? So we can pledge this position as a 1 year term, hypothecated at 1583, interest only, paid monthly. Okay, so that's a 1 year term liquidity option. And with our expertise in private lending, we could do a few different things to help you exit. We either find another investor to take that position at what we borrowed at, or even maybe exit that position totally to another private hedge fund, multiple areas of exit to provide the liquidity option for the investor in these short-term private lending first lien positions.
Absolutely. All right, let's do one more first. All right, so this property here, you can see the Zestimate at 373. We're talking about this first lien will be at about 190, roughly 190. So right around 50% loan to value again, same terms. Now he does have an appraisal at 400, but again, you're seeing basically how these things are laying out. They're folks that do not want to sell their house. They want to keep their equity if they can. Like this guy's been living in his house for 15 years. He's got a lot of equity in it. He just got into a bad situation and does not want to lose his house. So one of two things is going to happen. He's going to take this loan and he's got a great job. He makes about 200 grand a year again. But he's going to refinance this loan in a year to 3 years. Or if he cannot afford the payment, he's going to come back to us and say, hey, listen, I can't afford it. Let's get it sold. So the added benefit of not having to foreclose to get your money is, I don't even know if I can explain, how awesome that is, because these are such high equity, situations. They don't want to sell, number one. Number two, they don't want to lose their equity. And so we're coming in and we're actually helping a homeowner keep their house, where if you look at the laws, it's ridiculous. I cannot believe how hard it is to help somebody stop a foreclosure and keep their equity. It is the deck is stacked against folks for the most part. But again, this is another first lien position property, and we get several of these a month. So there's three. We probably got two more that we got in the month of September that are going to close next week or the following week. So there's the opportunity there is, if you don't want a second, if you want to be in the first and you're willing to take a little bit less interest to have that, have that first lien position, here you go.
And that's like $500,000, right there, that could participate and start performing literally in 30 days. Where can you find positions like that from qualified operators literally shift to you on a plate here today? So first movers advantage, just so you're aware, all the deals that we bring to the table here on this channel are a first come, first served situation. We have people hit us up after the fact and stuff's just not available. Happy to introduce you to one of our associates, Sonny or Sean, or even call me direct if you like for a position that you may have saw here today. Just after our mastermind, we'll have open phone calls or anything like that. So let's keep on moving here, Jason.
All right, so here's some seconds. Now, again, this one is in your backyard again. This is a bigger deal. This guy's got, let's see here, it's worth 1.8 million. He needs, let me see here, he needs 100 grand. So
This is
LT,
a second or
this is a second. He's got a. I mean, if he his first position is at 2.7%, so he clearly does not want to lose his first position. He needs 100 grand to get caught up. He'll be in this for, let's call it, a million. He'll owe a million on a $1.8 million house. So less than 60% loan to value. Great interest rate again with that cushion of the 40% equity. He's another person that does not want to lose his house. So he's not going to let this go to foreclosure. He is going to call us back and say, all right, I cannot afford it. He got his job back. He got his income back. So he's back in a situation where he can afford the first, which he doesn't want to lose. And, he understands he's got to make a big payment on the second. His goal is in a year or so, he will refinance into a traditional loan, get the second paid off. He wants to keep that first mortgage in place. And that's what he's doing. So, this is on the high end of what we typically see on a second. Normally they're anywhere from 30 to maybe 60, but because of the equity, again, you're looking at the equity. The thing's worth 1.9 million. He'll be in it for 1 million. So another really low loan to value situation where we're coming in and offering to help save the guy's house.
So through this structured line of credit collateralized by a second lien, as we originate this note with a mortgage officer to stay compliant, ultimately we will collect $1,500 a month. And pledging this asset through hypothecation, paying our second lien lender $833 a month. So since the equity cushion provides us such a stable position, we have the availability to, if the borrower goes non-performing, we end up paying off the second, paying off the first, fix and flipping the property for the additional margin, and we have a heyday. Not only did we provide our investor a bank quality interest rate and stability, actually more than actually what you would get at the bank, but also you have that peace of mind that if it does go non-performing, we just pay off and maybe even chef you another opportunity at that time.
Yeah, and Alden, I don't know what CDs are paying right now, but if you go the traditional route, a bank is going to take your money, give you a CD rate of what, maybe 2.5%, 3%, whatever that is now, and then they're going to turn around, they're going to lend it out at 6.5%. So, we're just skipping the middleman. Right, we're skipping the bank and we're going directly to where they invest their money and offering a higher rate to our investors with, in most cases, better security because there's a lot more equity in each deal.
So that deal at 100,000, say the lockup were like 3 to 5 years, uh, which depending on if you invest in the fund or through hypothecation, that monthly payment at 100,000 for 3 year term could be like 1166 a month. $1,000 a month in passive cash flow and qualified operation in the program.
Absolutely. All right, let's do one in Texas. So in this scenario, let me see here. You're talking about a $40,000 second. The estimate is 340, 341. The payoff is 135. So we're talking about, this is again under 60% loan to value. They're all pretty much the same, scenario where there's at least 35% equity in each property. So we've got a situation where we're kind of protected on with that loan, but this is another person that's got a reasonable amount of equity that is just not going to let this thing go to foreclosure. So they're going to call us on the phone again and they're going to say, what do we do? And if they'll work with us, then we're going to help them get it sold and keep as much of that equity as we can. Obviously, if they don't work with us, we're in a position where we're going to move in and take over that first. We're going to, rehab the house if it needs it. And a lot of times we know exactly what kind of rehab needs to be done because we factor that into the 65% loan to value. We're going to make sure that there is enough equity in it to rehab it and get it resold if that homeowner doesn't cooperate. And most of the time, in probably less than 10% of the situations, the owners just stop talking to us, and they don't cooperate. That doesn't happen very often, again, because we're not lending out at 90-95% where there's technically no equity. So we get deals like this. We probably get 30 to 40, probably 50 of these a month, exactly like this, where, the low loan to value, great return for our funding partners, as protected as you're going to get in a lien position, and we're helping the homeowner.
So at 40,000, and 20 deals a month, that's at $500,000, you could diversify across 10 doors, and earn a double-digit interest rate on 40,000. This deal right here, call it the Lucky Threes deal for a 1-year term at interest-only, payments paid monthly, 333.33 a month. Lucky Threes here today. For a 1-year term, and that's immediately available. We have multiple of these transactions that go on, as Jason's mentioned. Even at a 3-year term, 40,000 times the proposed interest rate divided by 12 is 466.66 a month for a 3-year term. Or you invest in the fund, and the fund guarantees the positions.
You want to do some more?
Yeah, let's do one more here today. So,
Okay,
that one was 40,000. We had $100,000 second. We had $250,000 and two $190,000 first liens. What else do we got on the board?
here's another. I mean, this is as typical as it gets. This, you can see that the Zestimate is 274. They need about 30 grand to catch up. Their total loan balance is 116. So, you're going to be in this thing for, call it 135 roughly. Again, about a 50% loan to value, with a house that is in really good condition, needs very little work. Same exact scenario. Their first mortgage is 5.75%. So not the greatest interest. We see a lot of 2s and 3s. At 5.75%, that is under market, right now, but it's not the greatest interest rate in the world, but they've got a ton of equity that they're trying to keep. So, like I said, if you've got $1 million to park, we can spend it. We get a ton of these deals, and we're not even, to be honest with you, we're not even marketing to find these. We've got the ability to scale this to a point where we're doing 100 or 150 of these a month, more likely. But exact same scenario. With every deal that we do, the loan to value is going to be great. The interest on that loan to value is going to be higher than you're going to get anywhere else in terms of a CD or a bank rate. And you're going to be protected, with a lot of equity.
Love it. We're gonna have a quick little Jason, if you could just stop sharing here. So does everyone understand the power of becoming the bank? I mean, it's literally life-changing what we have in front of us here today, and it's as good as the presenters. So, at the end of the day, this could be on Fox News one day, right? The opportunity's available. We have a 50 to $100 million conversation going.
Our next segment, Mobile Mailbox Money, is brought to you by Silvercrest Opportunity Fund. We'll discuss innovative income strategies with an expert. Mobile Mailbox Money is brought to you by Silvercrest Opportunity Fund. We'll discuss innovative income strategies with an expert.
As it pertains to mobile mailbox money, you're looking at creating structured income through diversified real estate investments.
In fact, that's what we call income by design.
With performing loans, you're essentially acting like the bank.
And that means there's a built-in level of security for the investor.
The debt allows us to get a predictable return.
Right, and it's backed by real collateral, the property itself.
The key is creating systems that generate monthly cash flow. That's what we call mobile mailbox money.
In today's volatile market, structured notes can offer you control and the potential for monthly income. Structured debt is not only safer, but it also has higher returns.
Mobile Mailbox Money, it's about creating passive income streams that literally show up like checks in your mailbox.
So it's not just a catchy phrase, it's a real strategy. And that's all the time we have for Mobile Mailbox Money. Thank you to our expert. This segment was brought to you by Silvercrest Opportunity Fund.
So coming to local television network near you, multiple opportunities of passive diversification on the table. And I think a lot of people, hesitate to take a move because what they see on the news, that could be on the news telling you today that alternative investments are one of the biggest things being Googled right now in the nation. Why is that? Because individuals are now waking up, to the opportunity because the availability not only to direct an IRA into alternative investments, tax deferred or tax free, say through directed IRA, but also our president here actually initiated an executive order for 401ks to have access to alternative investments. That's giving power back to you and your availability of financial freedom, opposed to have to go place it in a BlackRock, Vanguard, or State Street component, who's potentially controlling the world right now, is definitely a new opportunity for individuals, and it's never before been seen. So I encourage you, implore you, lack of confidence comes from a lack of education. And if you've feel that way, you need to get educated, whether it be through a note investment education platform. We could refer you to a few like the Note Investor University or, Kevin Shortell, bestseller on Amazon, or learning through YouTube University. Check out the various items that Directed IRA has online, and the Alt Asset Summit that's actually coming up here at the end of this month will have a booth there as well. But the availability right now is abundant, and we need your help that's actually viewing here today to expand the opportunity. This is a literal once in a lifetime program to find a seasoned professional as well as massive deal flow of qualified, benchmarked, programs with risk mitigation built into the option that you're looking at. Not every deal you're going to take, but listen, if you have 30 to $100,000 and you've taken an education platform, you've watched our channel, or you've been a current investor of ours, please don't hesitate to reach out. The availability for us to literally keep changing people's lives. We're keeping people in their homes, mitigating foreclosure and creating new opportunities, not only for our investors, but also, even creating affordable housing options here in the Arizona market. So from our primary business and most people that have been watching over the past couple years, they have failed to participate because we have come into the equation through affordable manufactured housing, and it being personal property. Now we have the availability to scale affordable housing, manufactured homes, personal property in the Arizona market, but also the private lending component in first and second liens, which is the real scalable opportunity of moving money on money instead of having to buy these homes here listed on our website, rehab them, resell them on terms through seller finance. You can only buy and flip so many homes at the same time at the end of the day, and that's why we've brought these other opportunities to the table. But currently, Win Mobile Homes is the largest dealer of manufactured housing in Arizona, and we have, I think, 3 homes that are going to close here by the end of this week, I believe, something of that nature, maybe early next week. So lot 174 is actually pending right now, which is listed here in Aspenwood off major cross streets of 56th Street and Broadway. And I'm actually acquiring that note into my fund, which is currently raising at a $50,000 minimum for the terms that are listed below. But you could invest today, and help absorb notes just like this and create affordable housing in the local market of Arizona. If you're non-accredited, and you don't find yourself to have $1 million in net worth or 200,000 a year in income, or I think it's 300,000 combined with your spouse, you could buy a note today, one note with one investor, and either that be through hypothecation, which we mentioned earlier, which means to pledge an asset in order to garnish capital investment, or you buy a whole note position on a manufactured home, yielding higher than average traditional yield on a real estate backed note strategy, here's your opportunity. So this is mobilemailboxmoney.com. We have active chat available where individuals actually monitor 24/7 of any questions that go on and things of that nature. And lastly, it's Silvercrest Opportunity Fund to the moon. We're originating now $100 million tranche for the second lien positions and the golden nugget of assumable mortgages that ends up tracking into as these people have 2 to 5% mortgages. But I know multiple people have actually been reaching out about these specific opportunities in second lien positions because the affordability of the acquisition, to find a position at $30,000 to $50,000 is tough to find. And at these benchmarks, it's literal gold out in the marketplace. So I'm going to open it up real quick. Does anybody have any questions or feedback about any specific deals or any of the above? Let it air out a couple seconds here.
Hello. Yeah.
Hey,
Can you
Miss
hear me?
Young. Yes, yeah, we can
Yes.
hear you. Happy to
Okay.
have you here today.
Thank you. I apologize. I'm multitasking, and so I have my camera off, but
That's
next
okay.
time. So I did see a property online, and I have several with you, but I'm interested in the one I saw in another state. And should I mention that? Like, I don't want anybody to get it before I do.
Yeah, so if you just have the street
Oh,
associated
yeah.
with the transaction, and we'll ultimately get with you after this
Okay.
meeting
Yes,
to
I took a
hash out what that looks
snapshot.
like.
Okay, I took a snapshot of it when I saw it, and so I will give you that street in just a minute here.
And we'll just take a little identifier of that.
Okay, and it is on Lumberton.
Lumberton.
Hmm?
So yeah, we'll talk with Jason, who's our primary provider actually of these transactions. And it's important. Listen, speak up. At the end of the day, happy to have you interested. It's all about your review. This isn't a hard commit by any means. This is expresses interest and we'll validate, if you're qualified or not. And make sure that it fits your benchmarks. Documentation is of utmost importance at the end of the day. So upon review, obviously that transaction could take place and you start cash flowing in literally 30 days. So happy to,
Yes.
make that happen for you, Miss Pamela. Any
Hmm.
questions maybe that you have about that deal specifically, like do any due diligence questions or anything of that nature? Just throwing it out there.
Well, I have already done my due diligence on it,
Great.
because again, yeah, I've had property with you. I mean, been a lien holder on your properties for several years now. And so I just one of my first goals in life was exactly what you're doing now. While I'm a lien holder, help people stay in their own houses, and it's a win-win, and make
Totally.
money while I'm doing that, right? Make my money work harder. And so I just happened to come across this because it is I have my grandson just went into the army a few years back, and he's in this city. And so I wanted to see if he could lease it out or something, but now I understand your program is you're helping the people that are already in there stay in their home, which works for me as well. So I just happened to go in a different direction with, 30 years of my own successful business. Doesn't have anything to do with real estate, but I do have to have somewhere to put the money to make it grow. And that's where I'm really glad I've come across your company. So yeah, I just am really ready to grab this property just because it's in that same place where my grandson is. I don't know. I just kind of feel like that's where I'm supposed to be too.
Love it.
Yeah, so I guess I need to know where do I wire the money and how soon?
Yeah, that's the North Carolina property on
Yes, it
Whiteville.
is. Yes,
Yep.
it is.
Okay. Yeah, that is going to be, we don't have the exact numbers yet, but it's going to be around 30. Let me see here, 30. Their first balance is 116 at a 5.75% Note, that's one of the last ones. Okay, I know which one this is. Yeah, so it'll be about 30, and again, we can get you all the details.
Okay, wonderful. And then how do I, so I'll just wait to hear from you
Yeah.
on how to get that going.
Yeah,
And
we'll send some docs for your review, and that should include all necessary information regarding what to send, where to send, and the hypothecated program, pledging the asset in order to garnish the investment. From a known associate. So happy to have you, Miss Young. Lots of deals going on. Anyone else have any need for clarity or anything today? I know it's tough to line up liquidity at any given time. I think that's one of the biggest primary factors of why people join and maybe not ask any questions and stuff like that. Listen, here's the thing. We do this weekly, every Thursday at 12 o'clock Pacific time, and it's free. We're literally doing all of this for free to help you take one step closer to financial freedom. That's what we call mobile mailbox money. If you find yourself accredited, listen, I hit 1.4 million with one of our largest investors last week, and we're absorbing those notes, in 30 days into the fund to facilitate his return. We could use another couple $1 million in these transactions. Look, we just brought about $1 million probably in positions. The fund is currently raising for the seconds. We may alter that a little bit in the deal disclosure to reflect some first blended opportunities. We're still evaluating that actually. But for these seconds, it's huge opportunity, availability to scale and not have to buy the house. We don't even have to buy the house. Like, what a crazy opportunity that is, and earn a higher net operating income annually with no maintenance, management, insurance, property taxes, having to worry about the tenant calling you that the toilet's clogged or they screwed up the AC unit because their kid hit it with an axe or whatever you want to call it. At the end of the day, these positions are literally once in a lifetime. I just want to implore you the availability of the golden nugget investment strategy here from the family bank. So treat this almost like our conference. Once a week, we come bring these deals, and our objective is to do $100 million in transactions on deals just like this, brought to you here today by Silvercrest Opportunity Fund. We're going to cut it a little bit short today. Don't hesitate to go back and view the other vlogs, the masterminds, the interviews, the real estate investment specialists from Kevin Shorto, Mark Monroe, Pace Morby, Nate Hare from Directed IRA, Nathan Turner from Diversified Mortgage Expo, and all the above. I could literally go on, I think, for an hour. So I appreciate each and every one of you. Pam, Miss Young will reach out to you here shortly. Look forward to hearing from
wonderful.
Rodney here soon as well, and anybody else, interested in the available opportunities that we have. If you don't see something that you like on our website, call now at 602-888-CASH. May have a special offer for you. So appreciate each and every one of you being here today. Let's all take action. Bam.